FOMO all your money into Bitcoin right now. Is that how this chart makes you feel? Because that's exactly what it's designed to do. If you're on Twitter, you'll see it everywhere. A chart showing Bitcoin price perfectly following global M2. They shift the lines, make a matchup just right, and then tell you global liquidity is pumping, Bitcoin's about to moon, get in now. But what if I told you the entire thing is a lie? It's built on fake data, and in the next few minutes, I'm going to show you exactly how this trick works, why it looks so convincing, and how you can really understand the connection between Bitcoin and money printing. So if you're on X, you've probably seen this before, but if you haven't seen it, it's a chart of M2 measuring global liquidity, how much money is in the system, how much money countries and central banks are printing. And the thesis goes like this. If you take the chart of M2 and you take the chart of Bitcoin's price, there's some number of days that you can shift the two. And if you find the right number of days, they'll overlay perfectly on top of each other and show you that Bitcoin price is perfectly following how much money's in the system. And therefore, when more money enters the system, Bitcoin price is about to skyrocket. Very simple terms, they're saying you can use it to predict the money supply goes up, that's when Bitcoin's going to go up. It seems to make sense, right? I mean, there's a graph right there that shows it. That correlation is pretty strong. Couldn't possibly be misleading, could it? Well, as usual on X, hidden deep amongst the engagement farming, there's actually a little bit of signal if you know where to look, but the rest tends to be noise. So in this case, we're going to lean on Lynn Alden, Sam Callahan, James Check, and TXMC Trades for the signal. Here's how this chart really works. There absolutely is truth to the idea that Bitcoin tends to be correlated with global liquidity. I'll explain why that's true and why that narrative also gets used to mislead you. Lynn Alden commissioned a research report from Sam Callahan last year, and they concluded that Bitcoin moves in the direction of global liquidity 83% of the time in any given 12-month period, which is higher than any other major asset class. So in a 12-month period, there's a correlation. More money enters the system, it's likely more of it will end up in Bitcoin, pushing the price higher. That makes perfect sense. As more fiat currency is created, scarce assets like Bitcoin, especially because it has a fixed supply, should appreciate in value over the long term relative to that fiat money that's being debased. It's true of basically any asset, but it's a compelling narrative that Bitcoin is the most sensitive to the global liquidity. And it means the opposite. If liquidity tightens, Bitcoin price is likely to drop. So Bitcoin does move with liquidity, but here's where it gets sketchy and why you need to be way more skeptical about the charts you see on Twitter, because I'm about to explain why the narrative's been manipulated, why M2 can't always be trusted. But first, I do want to clarify, because sometimes I see people saying they think this means Bitcoiners are cheering for more money printing. And I do think sometimes it's easy to spot some irony when you see Bitcoiners getting all giddy over potential money printing. That might be true for some people who are in it for the fiat gains and just want to see their bags pumped. But I don't think it's fundamentally true that Bitcoiners cheer for money printing. In my view, being a Bitcoiner and believing in Bitcoin means you fundamentally oppose government manipulation of the money supply. But we're also realists, and we know governments are going to print money. That's what they do. So yeah, if you're just in it for the fiat gains, you're going to be all hyped up thinking they're going to pump your bags. But if you're a true Bitcoiner, not to gatekeep it, that's just my opinion, you believe in killing the money printer and replacing the system with sound money. So there may appear to be some irony there. But what I really think is going on most of all is that we take joy in a perverse irony that the greatest government tool of manipulation and theft, which is their money printer, instead of harming most normal people, as it has for almost all of recorded fiat history, we've turned it on its head to use that money printing against them, to benefit us, not just them. Now, when they use that tool that typically debases the value of your savings and your earnings, if you hold hard money, like Bitcoin, you benefit from that. And lastly, because you see this a lot too, people saying, oh, well, Bitcoin needs the money printer, otherwise it won't ever go up. Not even close to true. Bitcoin will see more adoption and accrue more value, whether or not new currency enters the system. If you want to better understand that argument, you can watch this video right here. But back to M2 and why you shouldn't dump all your money into Bitcoin the second you see one of these liquidity charts. Here's the problem. I told you there's a correlation in the long term. Short-term global M2 charts that you see on X are incredibly misleading. Why? Yes, a 12-month directional correlation may exist, but that's not the same as a 108-day shifted chart that seems to overlay almost perfectly with Bitcoin's daily candles. If you think these charts are clean and trustworthy, wait to see how one bad number made people think $6 trillion was printed overnight. So the two most important points you need to understand are, number one, Bitcoin is not necessarily correlated with global or US M2 in any short-term period. And most importantly, M2 is not predictive in the short term. Because the simplest reason why you can't trust these charts is that, first of all, they can be flat out wrong. The chart you see here with the giant spike in M2 that quickly made the rounds on Twitter, telling everybody why the big print is happening and Bitcoin price is about to moon, It was just flat out wrong. Error in the data from the Bank of India. India did not print $6 trillion overnight. And there's been other examples of that in the past. But more than just mistakes in the data, the sneaky part that nobody on Twitter tells you, except a couple people if you know where to look, in these charts, you're not actually looking at new money printing. Here's the biggest reason why the short-term M2 charts are BS. Tell me how this chart can show daily or weekly correlation between M2 and Bitcoin price when most countries only update M2 once a month. The US is the only one that updates it weekly, but not daily or definitely not hourly. You can't build a real daily or weekly chart of global M2. There's no daily reporting on the data. So how do they get these charts? What this chart's doing is basically tracking 30 days of currency fluctuations against a static money supply number. What that means is for about 30 days, the underlying M2 number doesn't change. It's staying the same, but foreign exchange rates, like the dollar rising or falling against other currencies, are moving every second of the day. So when you look at a daily or weekly global M2 chart, the M2 data itself is not updating. The only thing that's really moving is the exchange rate. You're not seeing M2 grow or shrink. You're just watching how much the dollar is gaining or losing value against those other currencies. So if the euro strengthens against the dollar, even though Europe's M2 money didn't change, global M2 measured in dollar terms is going up because of the foreign exchange rate, not the money printing. So it's just meaningless noise. It's not real data in the short term. Here's what's more. So as of mid-April, only the US, China, and Japan had even posted M2 numbers for March. So everyone else is still showing February data. So how are we looking at a global M2 chart up through April if we don't even have updated data past February? You can't have an accurate global M2 chart for March and April. Again, you're just measuring a dollar weakening against those other currencies. So now you know why the chart is basically completely fake. But even beyond it being fake, it's not even useful as a predictor. So most of the time you see these on X, it's accompanied by the prediction that global M2 is going up, therefore Bitcoin is going to follow. So they're operating under the assumption that liquidity injection takes 93 days or 108 days or 142 days to impact Bitcoin's price. Just ask yourself if that seems realistic. Money printing is flooding the system. Why would it take Bitcoin 108 days to react? We're talking about a lag, right? Which in the case of consumer prices or something like that makes more sense because it takes longer for the money to move through and the changes to show up in the economy. But Bitcoin is not a consumer good. The money itself can move very quickly. If a central bank prints money, the liquidity can affect markets right away. There's no standard hardwired 3-month or 6-month delay. Investors often act immediately on new liquidity conditions, and they also often front-run liquidity conditions. So just blindly applying a 3-month or 6-month offset to force fit the chart, I would say is more of retroactively forcing the data to match the story rather than letting the data speak for itself. So was this all a long-ass winded way to say Bitcoin will go up when money printer go burr, but don't use a random chart on Twitter to justify mortgaging your house to buy more Bitcoin tomorrow? Yes, maybe it was. But I still think it's interesting and I think it's important to be informed on how data like this is manipulated for engagement farming or is just innocently misunderstood. Ultimately, Bitcoin doesn't wait 108 days to catch up to a central banker's spreadsheet, and neither should you. The lesson, as always, is stay humble and stack sats because in the long term, Bitcoin is going up and to the right. And if you like this video about how data can be manipulated, you'll love this video where I explain why government CPI is a scam designed to keep you poor. As always, never forget, Bitcoin's inevitable.